always suggest that they work on a team.
Yes.
To see how the experts are doing it.
Right.
Because to just start on your own, you're just kind of thrown into the wolves and you're like, here, go sell a house. So I think joining a team is great. And I also, back to kind of Equity Union's thought process, when you're surrounded by top producers and agents who do a lot of it, you want to be better. You want to be. Exactly. So I think for the new agents, it's almost tough for them to try to relate to like a new agent coming here trying to have a conversation. You just want to learn. You just want you to be a mentor. But I think, you know, to surround yourself with like agents is just, the environment is just raises everybody.
All right. Speaking of good, welcome back to the San Luis Obispo Real Estate Podcast, a.k.a. the House of Gryffindor.
Yes.
Let's get Gryffindor on camera first.
Don't wake him up. Don't wake him up.
Oh, my God. Just so great. Just hanging out there the whole time. This got bedhead. That's probably just all the time, right?
Can I ask a personal Can I ask a personal question?
Of course.
How did you train your dog to be so good?
Yeah.
You know, this is my second dog, and my last dog was pretty calm too. So I give myself complete credit.
Okay.
Yeah.
I like it. I would say, you know, I asked permission to bring him. I do bring him to the office every day.
Yeah.
And you look at him, everybody wants to hold him. I take him everywhere, so literally everybody just wants to say hello. So he's just used to being around so many people.
Yeah. See him shake his hair out.
I definitely changes the temperament, you know?
Yeah, well, he's great.
Yeah.
When my dog comes in here, people seem to like it. Not the same way as Gryffindor.
Well, he runs from office to office, and I think Sharon gives him treats.
Looking for snacks.
Yeah. Totally.
All right. Well, I think we have a topic today, right?
We have back Dan Stueve from Equity Union, our Senior Vice President and General Manager of the company.
Thank you.
And Lindsay Gogna, who's here and has a football team that she likes different than some of us like in here, but she's Director of Client Services. But before we go anywhere, I don't know when this is going to run, but Jeff, you have to be a happy person when it comes to NFL football.
Yes, very happy.
Okay,
very happy because you know when your team has, I think the probability preseason was 5% chance of winning the Super Bowl, and now they're the favorite in the Super Bowl.
So how long have you been a Patriot fan?
Stop it.
That
Did I get that wrong? All right. Yeah. Okay.
It's quite a ride. You know?
Yeah.
I kept waiting for, you know, as a fan and as a lifelong fan and growing up in Seattle, I kept waiting for the other shoe to drop. You know, and the Rams, facing the Rams 3 times is the most daunting thing for a Seahawks fan.
You lost one of your shoes in the backside of my team, I'll tell you.
Yeah.
Jeez.
I went with so Niner fan played Philadelphia, had no business. The game was over in about 40 seconds, but I just didn't respond because I was thinking, nah, it's not over yet. Right, just you're just waiting for something to go wrong.
Absolutely.
I watched every minute of that 41-6 butt kicking.
Seahawks. Well, let's move on to a more fun.
Let's move on.
Yeah, that's history.
Let's talk about real estate.
Yeah,
Come on.
yeah.
That's always fun.
So it's nice because you know the perspective you have covering a huge geographic area and what's happening in your marketplace. What do you see occurring this year? If you were talking to a buyer, or let's just say a buyer or seller, about what you anticipate this year in terms of sales volume, prices, those sorts of things. What are you seeing?
We're very optimistic. I mean, even just, you know, I feel like the last several years, it's just been a roller coaster ride that everybody wants you to look in this glass ball and tell them what's going to happen.
Right.
But we just see things keep going up. And even recently, you know, the rates are always fluctuating, but it just takes a little bit just to get people excited.
Yeah.
So a little bit of a rate dip. People that are waiting on the fence, they feel like there's movement and they're going to go out there.
Yes.
Listings, we're seeing a lot more listings. So the activity has been very positive. And I think that people are kind of getting out of that funk that they need to get moving.
Yeah, if they want to move.
If they want to move, yeah. So I do feel like the energy's picking up.
And have you noticed that in activity? I mean, down in the Southern California area?
We're predominantly in the Los Angeles area and also in the Coachella Valley, which is Palm Springs desert area. And I see it in both sides.
Okay.
Yeah.
And you're in San Luis Obispo now, too. Don't forget.
Yeah.
No, I know.
we're seeing similar things. It's interesting. One of the agents said, I think people are waiting until there's a new Fed chair for interest rates to drop. And, there's so much going into that, way above my pay grade, but the chairman doesn't actually vote on the rates. The committee does, and they determine short-term rates. Mortgage rates are different, but everything I seem to read would portend that rates will probably be lower in the future. And so for buyers to wait on that, I know what John's going to say, but I'm going to wait till the rates drop from 6-ish where they are now to 5.25. Well, by the time that happens, you're kind of gotten a whole different scenario, right?
For sure. And there's going to be more buyers, and there's still a ton of inventory. So it's not like there's so many buyers out there that are just going to gobble up all the homes, and it's just going to drive, the industry to completely change.
Right.
So that's still going to take time.
Yeah, I think because we talk about this, we had a big upswing last year in this county, up 70% active homes on the market.
Yep.
And then by the end of the year it was maybe 10%. And then they're slowly coming on the market. But it sounds like in your area, you're seeing listings coming on the market faster, which we haven't quite seen that yet here.
Yeah, because I feel like historically people would always kind of wait till after MLK.
Right. Yeah.
But it's like, get it out there.
Yeah.
There's activity. You're missing the market already if you're not thinking ahead. And I think it goes to working with an agent. I think the agents help guide their clients. That's part of our value. So whether it is working with a seller or a buyer, if the agent isn't doing their job, kind of keeping their clients updated on where things are at, getting the movement going, the clients are kind of waiting for advice too.
Yeah.
There's only so much online, and that's depending on what outlet you look at.
Well, history's a great teacher.
Yeah.
And when you look at the history of the real estate market in our country and in this state and in our county, there have been very few, and I mean very few periods of time where waiting turned out to be a good strategy. In fact, I would say never wait. I would have said never wait at the end of 2007, and maybe at the end of 2008, I might have said, well, I should have waited. But by 2011, that was all over with.
For sure.
And so there's never been a good time to wait, is my opinion, based on my study of history.
Yeah, and people ask me all the time, like, is it a good time to buy? Or whatever.
Yes.
It's like, well, it depends on I always say yes to.
Yeah.
But it's like, what is your intention? So if you're buying an investment property and going to hold it forever, if you're buying a home, and most people don't change their homes, with it earlier than 7 years.
Right.
It's why not buy now, get the home you want at the price you want before the rates do drop a little bit, and the prices may go up. And you can always refinance.
Yeah.
So instead, you're paying more for a home. I mean, I don't need to tell you guys this. You know this.
Well, every new buyer is worried about what?
Their payment.
Their payment. Yeah. What else are they worried about?
They don't want to lose money.
Yeah. Waking up a year later going, my home is worth less, right? We're all afraid of that. And yet, again, looking at history, it rarely happens. And when it does, it always recovers and then some. Very similar to the history of, the stock market. You buy an index fund in the stock market that goes down, you're going to wake up in a year or two, it's going to be up. At least in history, that's what's happened.
Well, you don't buy a stock to sell it tomorrow.
Right.
Hopefully
Exactly.
Yeah, some people
not.
do, yeah.
Yeah.
I was thinking about this driving into town today, and my wife and I next month been married 44 years. We have had 7 private residences. So 7 into 44 was what? No, 6 private residences. A little over 7 years, to your point.
Yeah.
And do you know that every single one of those we made money, except for one? And the one that we sold, at the time we sold it, the market was way down in Orange County. Orange County had gone bankrupt. And guess what was happening all over the country? Values were down. So the home we bought here, we paid less than the owner before us. So even if your property does go down and you have a reason to sell, most likely you're going to end up buying on the other side a property that also went down. So, my opinion has always been, if you can figure out a way to do it, do it. Get started in the marketplace.
For sure.
It's so interesting because we had some sellers approach us in the fall, well, right around December, and I could sell it now, or should I wait till spring? And I go, well, there's not much for sale, and if we put it on at the right price, I'm going to know in 3 or 4 weeks if we're going to have a buyer. And 2 of them happened this way, and so they did, and both got and ended up selling for full price.
Yeah.
All right, so they could have waited. Could it be better or worse? I don't know. But the nice thing about the market here is it's still pretty efficient, right? And you're going to know fairly soon. And are you seeing that most of the general market in Southern California? Is it if it happens, it usually happens earlier on, and sitting on the market, 3 or 4 months is usually
sure
ineffective. Yeah, we've seen that as well. Would it surprise you guys to hear that I saw this from the National Association of Realtors, this information, that there were about 4 million sales last year, a little bit more. And there's about 1.5 million agents, okay? So 70% did not sell a single home.
So we're talking about 1 million agents, a little more.
1,050,000. Okay. Now,
Didn't sell a home.
you're in a real estate company, right? We're more a team and individual agents. So think about that. So 1,050,000 of the 1.5 didn't sell a house. If you own a company, that's not a good year for you.
No.
With those agents. Then it went on to say 90% between the 70 and 90 sold between 1 and 3. Okay. That kind of agent probably wouldn't make your company either. Right? I guess. So I guess my question is, what is happening in the real estate industry when it comes to this type of thing? Because we saw this big merger, which you would know more about, or the consolidation.
Sure.
What have you seen, and how do you think it's affecting real estate?
Yeah, I think that we're still coming off of COVID, and I think in the fact that a lot of people got into the industry during that time, and I think anybody could pretty much sell a house during that time.
I see. Yeah, hot market. Anybody gets in, they can make a living. Yep.
And anytime there's a change in the market, I think the realtor numbers do trend downwards.
Mm-hmm.
And then there's some sort of interesting thing. I think TV had played a big role in so many people going out and getting their real estate license and thinking that they can sell these homes for high, commissions and not really run their business like a business. So I'm surprised it kind of took this long, and it's kind of like, okay, I mean, we've been out of COVID for how many years now?
Yeah.
And it's you would kind of see some agents that might not produce, and they're still paying, their board of realtor dues, they're paying their E&O insurance. And it's like, how are they putting food on the table? It's a little concerning, and we certainly don't want agents on our roster just to collect these fees from them. I feel like we're doing a disservice to them. So we as a company have kind of looked at it as a whole, and how do we maybe help some of them maybe self-discover that this is kind of not happening anymore, which I think was a good decision, and it I think helps everybody in that regard as well.
Is it evident to you, Lindsay, when you're working with the agents, which ones have more experiences than others in terms of?
I know within the first few minutes of sitting down and onboarding them, if they have, their CRM in place, they have a schedule, they have system, all of these things, you can really tell, what their database looks like. I mean, you can tell who the ones who really want to be there someday, and they have it in them. They just are starting out, and you can tell the ones that it's more like a hobby.
Yeah. And Dan, it's what I gathered when Hal was talking to Harma about joining your company. You have made a business decision to say, we really only want to work with the higher performing agents. So if you're not selling 10 or 12 houses a year, which is what, 6-8 times the average, you're probably not going to be a good fit for your company, right?
Yeah, and I think to that, it's obviously there's exceptions out of that, but it's people that I think have been in the business for a long time, and they're maybe not needing the brokerage in so many different ways. So we like to focus our energy on the people that really want to have their business plan, have the goals, and how do we help them achieve it. So that's really where the focus has been. So one of the reasons why we don't really market to new licensees, not that we don't have tools, but it's not really feasible in the market for us.
Well, and isn't it interesting? I mean, what other practice can you you got real estate, but if you were in law school or a physician, I use those examples. When do you start to work on patients? Right?
Yeah.
And there really is, for a new agent, it's very difficult. I mean, I got it in the early 90s, and that first few years is really tough, and there's so little to learn. I mean, so much to learn, and you have so little experience. And like, you got into the real estate with a great top producer, Neil Weichel, in your arena, and when you joined him 15 years ago, was it? Mm-hmm. He's doing 150 or whatever sales a year. So you got to get that much experience in the transaction every day.
Absolutely. I always think new agents, because again, there could be the next big thing, new agents starting. I always suggest that they work on a team.
Yes.
To see how the experts are doing it.
Right.
Because to just start on your own, you're just kind of thrown into the wolves and you're like, here, go sell a house. So I think joining a team is great. And I also, back to kind of Equity Union's thought process, when you're surrounded by top producers and agents who do a lot of it, you want to be better. You want to be. Exactly. So I think for the new agents, it's almost tough for them to try to relate to like a new agent coming here trying to have a conversation. You just want to learn. You just want you to be a mentor. But I think, to surround yourself with agents is just, the environment is just raises everybody up.
Well, and it's funny because within our office, we're kind of a big deal here in the area. But, when we joined the company, it's like, Dakota was saying, I feel like, we got a lot of room to raise our game, and I love that. Me too, right? We want to do great for the company. But I mean, I just can't imagine, you spend a year and your first year and you haven't sold a house, which is very normal. And it would be like, then next year, you're going to get your first patient, which is a client. It'd be like being a doctor, and all you do is you study outside the hospital. You're better off having a nurse or someone that's been in the operating room at least, and sees like, oh, that's where that goes in, and oh, this is what happens when something goes wrong.
Yeah.
There's just none of that in real estate. It probably needs to change.
Right? Well, and our transactions today more complex than when you started. I mean, just the paperwork itself.
Yeah.
Right? You're filling out 50 sheets rather than 2, right?
Yeah. No, the compliance is a handful for sure. But, the longer I do this, the nuances are a big deal, right? Yeah. Because it is so easy to get stuck in a transaction. The house I bought, we found out the sewer line needs to be replaced. I can't afford that, and so I'm not going to do that. It's done, right? But with some coaching, people go, okay, you're living in the house. Would you fix the sewer line if you live there? Yeah, okay. Now you're going to give it to the buyer, and and I had one the other day. A client was moving into a house. The house they were moving in had water damage. A faucet was left on. And
do they have the 4-letter M word?
Well, yeah, a little bit, but then somebody gave him a bid of $120,000. It's like the day before closing on a walkthrough on an empty house, and then it was kind of a conversation to the point. Okay, if you had a leak in your house and you didn't see it for a day or two in the sink and getting in the cabinets, would you just move out and sell your house? No, you'd fix it. So we were able to quantify it. It wasn't a big deal. The seller felt bad because they had moved out and just left running. So you got to have calmer heads and put things in perspective. And you just can't get that unless you're in it every day like you were, right? And like you've been.
And I think even the experienced agents, it's like every deal is a little bit harder these days.
Yeah,
Keeping it together.
Yep.
Just dealing with clients and their expectations. And to some point, like there's reality checks. So this is how, if you want to close this deal, this is how it's going to happen. And if you don't have the experience in the industry to kind of guide your client in that way, and know the options that they have to get what's best for them handled, you're not going to be able to do it.
Yep. Yeah.
And I even think that the experienced agents that, maybe are, because that's not just new licensees, this number that hadn't produced. This is the entire realtor count. I think back to COVID, it was very easy for people to sell property during that time. I mean, all you had to do was throw it up on the MLS and you're in escrow with after
Yeah.
30 offers or whatever it is, right? So I think people get used to maybe that, and it was kind of a hard readjustment to their own lives to be like, oh my God, I dropped the ball on my lead generation sources.
Right. Yeah.
I stopped we heard so many times that people had left leads on the table because they were too busy to help all the leads.
It worked so good, I quit doing it.
Right. And it's
Right.
like you had to kind of get back into that mindset. And if you're there alone, if you're not part of a team that's helping you, pushing you, even just the camaraderie of, hey, we got to get this done, you're floundering. So it really goes back to the support of the team environment, or maybe that's the value of the brokerage to these agents. But there definitely is. We need motivation every day to do what we need to do, regardless if it's real estate or whatever industry it is.
What have you always said? This business is.
It's a simple business.
Yeah.
It's just not easy.
Yeah, there you go.
It's gotten a little more complicated.
And when you first heard that quote, it has changed on steroids since then.
Yeah, that's correct.
That it's not easy.
Yeah, it does take a lot of energy to get to a certain point, to get a client, to help them get what they want, whether it's buying or selling a home. Yeah, so it's rewarding, but the payoff is pretty far down the road oftentimes.
Well, there was a time when I think we would check in with Dakota, probably time to do it again, and go, what percentage of our escrows that we open do we close?
Yeah.
And I know that our local title insurance company told us it was about 50% a couple of years ago, and we were at about 85 at that point.
50% falling out. We had 85 closing.
We have 50% closing in the county.
Yeah, 85% fell out.
And Dakota was, who runs your escrow department. He was closing 85% of yours.
Yeah.
So we felt good about that, except that a couple of years before that, it was 95%, right? So it is harder to get deals to the finish line today.
Yeah. Yeah.
More compromise, right?
More compromise. Yeah.
How many times have we talked about that word?
Stabilize. If you think of the insurance shock that happened, now we're used to it. The interest rate shock. Okay, it's stabilized. So people, it may not be as attractive as it was, but you get used to it.
May not be 3.
Yeah.
I think it's setting expectations
also
for each party.
Absolutely.
Like, this is what may happen, so they're prepared and they're not thrown under the bus.
Yeah. Yeah, I'm sure you're a master of that after all those, thousands of closings.
If you're a first-time home buyer and you're, 38 years old now, you have not been an adult until the last you've not been in an environment until the last couple of years as an adult where the interest rates were what they are today, because you were in the 4s, the 5s, from your 20s into your 30s. You just didn't buy yet.
Yeah, you didn't see.
And today, when you're Hal Sweasey or me, we're looking at 6% going, this is stinking awesome,
right,
compared to where we were when we were first-time home buyers.
Sure. Yep.
Yeah.
So it's helping people shift their paradigm from 6 is bad to 6 is good.
Yep.
And it is.
First place when I was 19, and their interest rate was 8.5%.
That away.
Nice.
19.
Yeah.
Good job.
So you think 6 is pretty damn good?
Oh, I'm thrilled. I mean, I have 2 point.
Yeah, I know you.
Now she's showing off. Now we're just showing off.
8.5.
Let me tell you what I got from yeah. How much is insurance? Is that stabilized? Because there's been some big fires in Greater Los Angeles, and
I think it's a tough pill to swallow when you get the quote. I mean, I just sold my boyfriend a house in Encino, and he had to do fair plan because he couldn't get, and it's a big. It's. I feel sorry for first-time home buyers.
So how big a house was it? I guess is what I meant.
I'm sorry. Like 3,000 square feet.
Okay. 15,000. That's we don't see much of that here.
Right.
Right.
Well, we don't see as much fair plan here as they do down there.
I mean, granted, the house is in Encino, which kind of backs over. The Palisades and Brentwood, where the fires were.
Oh, okay.
The water tower was right there.
Location.
Uh-huh.
Okay, good.
Yeah, I've shared this. My daughter and son-in-law bought a house in the Pomo, year and a half ago, and I come out of the insurance industry, and that house probably would have been $1,000 a year to insure, and they're spending.
How long ago?
5-6 years ago,
Yeah.
and today they're spending $3,000 a year.
Yeah.
It has changed, and I'm not going to go political on all the whys behind that, but it has changed. The good news is it's not as bad as it was 2 years ago. There are more opportunities in non-fair plan areas today than there was
The
a
market
couple
is
years
opening
ago.
up a
A little bit. There are a few companies that are starting to inch their way back in, and I hear that a few more might be getting close.
Yeah. Well, it would stop transactions in their tracks.
Yeah.
Oh.
Yeah. And we just don't see as much of that now. So fingers crossed, whatever that means. So,
Yeah.
Well, good. Well, I think we're all excited for 2026, right?
I am.
Yeah.
Very
we're happy to be
excited.
in the battle with the Equity Union. So
We're happy to be
thank
in
you
it with
guys.
you.
Yeah. Gryffindor, thank you. I just feel calmer with Gryffindor here.
There you go.
He helps, right?
He's a
Yeah.
service. He needs a vest. Service animal.
I want a vest. All right. James, take us away.
So how do you like San Luis Obispo? Do you have you gone to Giuseppe's yet? Hal's restaurant?
We have not, but I've heard, and I think Lindsay was going to take me there for dinner tonight. So
Oh, okay.
that'll
I
be
thought
part-
Dan was taking me to dinner. But yes, we're going there for dinner tonight.
okay.
We'll give you the review on when we get welcome back for our third podcast.
Right, there we go. Yeah, that sounds good.
I was hoping for an invite, but I guess you,
been up here a fair
you missed that one.
Yeah.
You've been a fair amount.
Yeah.
Okay.
It's great up
Yeah.
here.
Awesome. Okay. Thank you everybody for watching. Hopefully we gave you some good information here. And yeah, Jeff, what else we got?
I know in the last episode, JT was talking about AI. It's funny. I just blindly put into AI, why choose Equity Union Real Estate? I kept it as broad as possibly. And number 4, there's lots of reasons. I'm not going to get into all of them, but number 4 said local specialized expertise. Despite their statewide growth, they maintain a boutique feel through specialized divisions, including luxury and estates, commercial real estates, and regional dominance. They recently expanded in the Central Coast by partnering with the top tier local teams like Team Sweasey and San Luis Obispo. I'm not. I could put a screen cap on this.
Wow.
I see it. I saved that. I'll put it up on.
Who wrote that article again?
Yeah.
Yeah, was that on NBC News?
I'll tell you, we paid him.
That's why it's called
paid him.
artificial.
Yeah, okay.
Hey,
Let's get some more of that, though.
we'll take it.
All right.
All right. Well, thank you everybody for being here, for making the long trip over, and hopefully we can get you to come back and talk a little bit more.
Sounds great.
Anytime.
Thank you.
All right.
Thank
All
you.
right.
All
Thanks
right.
everybody.
Thanks.
We'll talk to you later.